You see a bottom near in the current fall in the markets, or and where do you think recovery to begin? In which sector do you think the recovery will first start?
So, absolutely. So, our belief is that as long as the earnings trajectory remains by and large in line with consensus, we've started seeing some degree of earnings downgrades, but it has not been meaningful, maybe a few percentage points here and there. But if earnings delivery plays out, then the market would see some degree of volatility, but may not see a sharp downturn. Also, remember in this sort of a market environment, from the macro perspective, India continues to shine in the global context. And secondly, while there is volatility on FII flows, the domestic flows continue to remain fairly strong and solid, providing support to the market. And therefore, while we can see volatility or consolidation, it is unlikely to see a sharp downturn, unlike what we saw in past instances over the last couple of decades when there were global events which led to the sharp downturn in markets. So that's number one. Second question that you asked is from a sectoral perspective, where do we still see valuation comfort? There are a couple of sectors that I wanted to discuss. First and foremost, our belief is that the entire consumption pact seems to be well placed, especially with context of where incremental growth is coming from, some amount of revival on the rural front, and the demand trajectory, which should start to improve post the festive season, as well as with the monsoons, as well as the Rabi output likely to be good. So that's one pack that we are watching out for, and where we believe that risk reward still is in your favor. The second segment is technology, especially where the large cap tech players are concerned. Here we have seen some up move in stocks, but here still valuations remain fairly reasonable, especially where some of the large cap tech players are concerned. And we are starting to see, if you look at commentary from some of the companies that have reported numbers already, there is improvement in terms of discretionary demand, specifically in verticals such as BFSI, where ultimately some of the larger players would possibly stand to benefit considerably. Some of the discretionary spends coming back, as well as the structural opportunity where Gen AI is concerned, makes us fairly positive where the tech sector is concerned. However, one caveat, of course, some of the stocks have seen some recent
Yes.
up move, and therefore one would have to be somewhat patient where the sector is concerned. And the third aspect is banking, especially again the large cap banks. There is a considerable degree of struggle or challenges in the sector where loan growth has been coming off, margins have been under pressure, some amount of credit cost inch up where unsecured lending is concerned. However, valuations seem to reflect a lot of those concerns. And therefore, if you have a slightly longer term view, the risk reward will possibly be favorable where some of the larger banks are concerned. So these are the three sectors where we believe that valuation still provides some degree of comfort in this current market environment.